Welcome to Trenches Trading. It's Tuesday, November 25th, 5:28 a.m. And I just want to go over the market, a few charts, and any news that's coming out. So I guess we can start with the news. So for today, Tuesday, November 25th, we got core PPI numbers coming out, core retail, PPI, and retail sales. This is gonna be at 8:30 a.m. So 3 hours from now, an hour before the markets open, uh, depending on what these numbers look like, there can be some real volatility in the markets. We also have these other articles coming out. I tend to focus more on the red folders or the orange folders as they have a higher impact on the markets. All right, Wednesday, tomorrow, we got unemployment, then durable goods, core durable goods, crude numbers, some other stuff. Thursday, it's a holiday. Oh yeah, Thanksgiving. So the markets are closed, I believe, on Thanksgiving. And then November 28th, I believe it's a half a day in the markets. So I believe they close at 1 p.m. Eastern Standard Time. Okay, so let's look at the markets from the monthly point of view. Last month, October, price got right up to the 3 ATR and then started pulling back a little bit. This is the SPY. Um, if you look at this trend, right, there only tends to be a couple red candles. Like there's one here, then price bounces. Another one, price goes up. This is like the biggest drawdown, 3 consecutive months. Green, one, 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 two, and then one right now. So on the monthly, things are still super bullish. Same thing on the weekly. I mean, we've had one, two, three, four red candles in a row. So that is definitely the most we've had since uh, this pullback from February to April. So definitely something to be aware of. And on the daily, we actually have a moving average crossover to the downside. So this white line is the 8 EMA or the 8 exponential moving average. The dark blue is the 34 and the red is the 89. Okay, so 8, 34, 89. And then going in the opposite direction, these are the Keltner channels. This red one is a multiplier of 3 and the blue one is a multiplier of 5. So 3 ATR, 5 ATR, 8 EMA, 34 EMA, 89 EMA. Because of the crossover on the daily, um, this chart to me is considered a bearish chart or a chart with bearish sentiment, which essentially just means that the path of least resistance is now down and not up. Um, how does this work in real time? Well, as long as price continues closing underneath the 34, then the trend is still intact. All right. If we look at the previous trend, right, once the EMAs kind of swapped positively, then price just respects them and trends higher. So now the EMAs have crossed into negative territory. So it's time to see what happens, if price is going to trend sideways, if price is going to dip lower, or if price is just going to reverse and the EMAs are going to cross again and basically we have our holiday rally per usual at this time of year. So this is the SPY. Let me put a Fibonacci retracement on here just to kind of give you guys ideas of what the levels look like. So this was the original retracement. See, we hit TP1. Essentially, we came really close to TP2, and then we started pulling back. That's the SPY. Let's move on to the Qs. Right, similar story. This was the retracement. This is a weekly chart. This is a monthly chart. Right, just one red candle. Doesn't look crazy, but when you go on the daily chart, this is where things get interesting, right? Because the moving averages have crossed going downward. So sometimes they cross and you get a small little dip like this. And then sometimes they cross and you get a big retracement like that. Obviously, there's no way to know what that's going to turn into. But, that's about a 25% pullback in that situation. From the high to the cross low, that was 7%. From this high to the cross, the lowest part, 15%. So you really have no idea. What we do know is that so far from the high, the markets have dropped about 8%. Okay. So that could be the bottom. Right? There was one that was 7%. It could get lower as well. The only thing that I know as a trader is that I would look for technology names to play to the downside. Names like Microsoft that I know are trending lower. You see? So I got some old drawings there, but as you can see, path is trending lower, right? So that to me makes the path of least resistance down. Moving averages have crossed. Price is trading below all three moving averages. I would just use a fib in reverse. So from this prior swing to the most recent swing high, and then see where prices drop to. So right now I hit the first target. Second target is at 450, and basically keep moving down like that. So that was the Qs. That was the Microsoft, just the technology name. This is the Dow. So same thing on the monthly, everything looks fine. On the weekly, we had 1, 2, 3 red weeks. Yesterday was green. And then on the daily, we have that same moving average crossover. So right now, the markets are pretty bearish, the sentiment on the daily charts. Doesn't mean that we're entering a bear market per se. It just means that currently the sentiment, or again, the path of least resistance is going down. So this is the Dow on the daily. We looked at the SPY, we looked at the Qs. Let me put the weekly chart, monthly chart, and then go to IWM. So IWM, right, big drop. IWM got bought right back up. 1, 2, 3, 4 red weeks. And, yesterday was a big green day, 1.8% move. And Friday was a big green day, 2.8% move. So, in about 24 days, the market just dropped 9%. But then in 2 days, or 3 days, it gained half that back, 4.5%. So, a lot of big swings. Again, the way I would play this is looking for names in the index to short. Names like Oklo. You see, price has been dropping, 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 dropping. I would look for a setup. Charts like APLD. Price is dropping, dropping, dropping. Okay. And so, yeah, that's the market. We got SPY, Qs, the Dow, IWM. The daily charts are now looking bearish. The weekly and monthly still look bullish. Um, I would just basically find charts that have the same sentiment as the indexes, and then look for setups intraday and play that in the same direction of the trend. With that being said, I do have 7 charts that are a mix of sentiment. So some are bearish, some are bullish. Excuse me. All right, so let's knock this out. So this is just a good lesson for the eyes. Okay. So what do we see here? So we see a trending chart, right? It's going higher and higher. We also see that the moving averages have crossed over to the bear side. So the moving averages are bearish. We got high, right? Low made, lower high, lower low, and then we had this high made. If price stays underneath here at 162 and makes a new low lower than 143, then we can conclude that this is going to continue going lower. If, however, price takes out this 162, then we can probably make the assumption that this thing wants to go higher. It does look like it wants to go higher, right? It's taken out a few of these swings here. We got positive momentum down here, right? We went from red bars to 2 yellow bars, so that's very positive. And also, we have earnings coming up December 3rd. So, with earnings, there could be buyers coming in, playing a run into earnings. So, this is 5. It's got a daily setup. It looks like the moving averages want to cross back into the positive. I would wait to see what happens today before making any decisions. But I will say, if I just happen to separate this zone a little bit, let me use a bright color. So this is an area where price has been getting rejected. Right? It came up and got supported a little bit, then fell, and then yesterday it came up to this level. So if the price can get over this level, then I think that means it's easier for the price to go up than down. If the price stays underneath this level, then I would imagine it'll be easier for the price to drop. That's Wednesday the 3rd, so contracts, they only have the December 19th series, and their spreads are not like great. I would run a spread. It's a vertical spread if I wanted to play this. Um, Maybe these 155s by 60, 160. So these are going for about 255. I could do that spread. I would do that. All right, next chart is EW. Oh, I didn't look at the monthly or the weekly charts on 5. So the monthly here got plenty of space to run up to 3 ATR. And the moving averages are just crossing positive right after several green months. So this thing could absolutely be getting ready to start trending in this zone from essentially 160 up to 214. Weekly looks good. Moving averages are stacked positive. We got a squeeze. Price has space to run. All right. This is EW or EO. Uh, the monthly chart, moving averages are stacked positive. This thing's been squeezing since 2023, so definitely ready to make a move or getting ready to make a move. The weekly chart looks good here. They beat earnings October 30th. So they beat earnings. Price went from 76 up to 86, and it's still here in the 80s. So that's a good sign. Right, the move off the earnings has been sustained. Right, support levels have gone higher. So I would definitely be looking to play this to the upside. Um, let's see what these contracts look like. So I like these 85 calls, the January 85 calls, a 40-cent spread, going for about 320. And I also like these 82.5 calls for December. But I figure if you're gonna pay 350 or 360, you might as well get the extra time. Or at least that's how I'm thinking about it. So the 116.85 calls. And if price started closing underneath 82, essentially back in the zone down here, right, where price was getting rejected underneath this level, then I would use that as a stop. And if price stays above this, then I feel like the world is open to the price action. Um, Essentially, I want to stay above this zone, and in my eyes, that makes the the that makes the path of least resistance up to new highs versus down. If the price starts closing down here, then in my eyes, I would see this as again the path of least resistance, basically going down. Um, so this is a bullish looking chart. We got a nice little bull flag. We got squeezes. Ideally, a pullback to this zone would be the best risk reward ratio, right? You buy in here to pull back towards 82. You're stopping out right underneath this area and looking to ride this thing up to maybe $100. All right. So now we have GD. GD's been, going great. On the monthly, it looks great. On the weekly, it looks great. And on the daily, it looks like it wants to cross, like the moving averages want to cross going downward. Um, they did beat earnings, and they do have some news. Let's see. So just some political stuff going on. But any case can be made. I think it's just gonna be depending on the time frame you play and then where you draw your line in the sand. Basically saying, okay, below this level I'm wrong and above this level I'm right. And then letting it play out. Um, this 335 area seems to be an interesting zone, right? Where price was either rejected from it or supported by it. So price is here now, offering a great risk reward ratio. If you or great easily definable area of risk, right? You don't know what your reward's going to be, but you can define your risk. You say, okay, I'm willing to exit under 335. So if I get in at 337, I'm risking $2. If I get in right at 336 or 335, I'm risking $1 or 50 cents or whatever. And then, you follow the chart and see where this thing's going to head. And you can use like a fib to get some target ideas. Right? 352 being area of major resistance. 367 being a target extension. 376. GD. This is a daily. Let's see what these contracts look like on GD. So I want to get some time, at least 24 days. This is a $300 stock, so a wider bid ask, I'm okay with that. I wouldn't mind doing maybe like a 337, 342 spread. Let's see. Yeah, so it's a 5 wide going for 250. Price has to get over 342. In order for you to make profits. That's 24 days. Let's see what the 10-day one looks like. I like this one better. So you get 10 days. It's the same strikes for 235. When I run vertical spreads, I like to get less time. I just feel like um, that's better for me. If I'm going to get naked calls, then I would look to get more time. Um, I don't really like these spreads though. So I wouldn't play this chart with naked calls. I would do this spread this December 5th, 337 by 342 spread, but that's about it. I feel like the chart is in a place where decisions need to get made, and the spread on some naked calls is just not worth it to me. So this is GE. Um, as you can see, right, this was a setup I had before, and a new setup has appeared. So moving averages have crossed to the downside. We got some squeezes. Prices bounced up a little bit towards the 8 EMA. Again, perfect entry would be up at the 34 EMA. Everything is just swapped backwards. Um, I would enter up to like 307. So 296 to 307. Let's see. That's an entry. And probably use this swing. up to the high, and target new lows, new swing lows. 282, 273, anything like that. I would stop out personally over 307. Um, if you want a tighter stop, you could either wait for price to pop up a little bit or maybe even use like 305. Um, all right, price has been rejected up until about 305 and then gets supported over 305. So as long as the price is not closing up here, then I think this is a safer, not a safer, but it's a safe bet. Your risk is defined, and you know where you would exit, right? So GE, let's look at some puts. What was that? The daily chart? Yes. We're gonna get some time on these. December 19th. Again, these spreads are just not the greatest. So I'll probably look for December 5th and mess with a vertical spread. I like this 295, 290, going for 258. Again, it's about risking 1 to 1. So December 5th, 295 by 290 put vertical spread, stopping out over 305 and just targeting new lows. Targeting new lows. That's GE. This is Cocoa. Cocoa obviously is something that's trending higher. Monthly chart looks great. Weekly chart looks great. Right, prices shooting up here towards a 3 ATR. Yesterday on the daily, this thing made almost a 6% move. Some folks increased the target to $58. So a lot of positive things for Cocoa. Let's see what these contracts look like. They got monthlies, and I mean, it's a $50 stock, so these contracts are really expensive. Yeah, this is a tough one. I think I would play these with a spread, and let's see what this looks like. So I'd probably look to do something like that, where I'm doing a 5 wide for about $3, risking 3 to make 2, just because the spread. Honestly, another way I would play this is buying shares. Um, that would be another idea. I would definitely target a move up to 60. Let's see. So I hit TP1 yesterday, according to the fib ratios. And we got some possible targets: 54, 57, 63. Vita looks good. I would zoom in to like a 15-minute chart. All right, price went up beautifully. Little consolidation. Ideally, it would make a little dip towards 50, and then that would provide a great entry point where your risk can be defined, and you don't have to risk too much to find out if this thing is going to work or not. Yeah, around $50. I'd be happy with an entry around $50. That's Coco. That's MS. So the monthly again looks great. Weekly looks great. And then the daily, we're still moving averages still are stacked positively. So we got positive moving averages. We got a positive momentum bar yesterday. This thing is an earnings winner, and it just looks like it wants to go higher. It was part of that pullback, dropped about 9%, and we had a bounce. This was Thursday, and then we had a bounce yesterday. If these highs from Thursday get taken out, then this thing for sure will probably continue trending higher. MS. So this was what, the daily? Yeah. So we got a daily chart. I want at least these December 19th calls. And these 165 calls. They look great. Got a 30-cent spread. It's $162 stock. For me, that's great. So get these 12, 19, 165 calls at $3, at $4. All right. And then probably want to establish where you would consider yourself wrong and where you would consider yourself right, or somewhere where you would be like, all right, I'm just waiting to see. I think it's going to be about right there for me, being that price trends lower from that area and price seems to be supported from that area. So if the price can stay over 161.40, then I would stay in Morgan Stanley. If price starts closing underneath that, then I would make my exit, and I would watch it and get back in if it started closing back above that area again. But underneath it seems like just all this noise down here. I wouldn't want to get in up here and then ride it all the way down to 152. That just doesn't make any sense to me. So I like defining my risk right here, a previous area of resistance, not too far from my entry. These contracts are great for me. And then ideally, price would go to make new all-time highs. All right, last but not least, STLD. I really like the way this chart looks. The monthly looks great here. The weekly, this thing's been on a tear since August. What is this? Up 34% in 100 days. All right, that's beautiful. And then the daily chart looks amazing. Yesterday was a big day, about a 2% move higher. Friday was a great day to get in on the pullback. So was Thursday, Wednesday, Tuesday. So all of last week was great days for entries. But this is where the price is now. And so you can absolutely take an entry here. I think I would do something where I would get involved up here and stop out underneath 159 so that I can avoid falling back down to this area and basically just keep my position open over 159. Um, so from 159, this is the noise, right? So I want to stay out of this zone. I want to be in the zone that's from these people and up. And I want to see what can happen up here. All right. Okay, so that's STD, STLD. Ideally, I would get in on a smaller time frame and just play the same area. Right, again, this 159 area. You see price was rejected, came all the way down, rejected, rejected, came down, rejected, then finally came up. So that's my area. I don't mind getting long here, stopping out just underneath it, and then seeing, what the market gives. So risking one to make three would put the price at about 167. Um, Using the fibs, that first target is 168. So risking one to make three seems like something that's possible. We got three ATR at 169. Let's see what these contracts look like. STLD. Oh, these are nice. So we got a 50-cent spread for the 165s. And yeah, that's really my favorite ones. So 12.19, 165s. I have $5 or better. I'll just put that here. 12.19. I think the last chart also was 165 calls, but the other one was at $4. This one's at $5. Yeah, see, 160, 162. That's so funny. 165 calls at $4. So I like this chart better though. I think it looks much more stable. Also, you could make a case for a double bottom, which tends to be a bullish pattern. And you could also say that the double pattern is in play because the middle part of the double bottom has been taken out by the most recent candle. So when there are double bottoms, let me delete this. The idea is that when the W part of the double bottom, right, uh, uh, when this area gets taken out, which is what happened yesterday, then the double bottom is now officially in play. So this looks really good. Ideally, again, I would enter using a smaller time frame. On a pullback to this level would be my ideal entry, 159-ish. Then I would just hop in and enjoy the ride. Stopping out under 159 and ideally riding this up to wherever it wants to go. So that was the markets. On the daily chart, they're all bearish. There are some bullish and bearish charts out there, right? Google looks great, really bullish. STLD looks really bullish. Apple looks really bullish. And then you have charts like Microsoft, which are not looking bullish. They're looking bearish. Boeing, Oklo. They're all out there, right? IONQ. So lots of names, right? Coco looks bullish, but then I think five 5 is interesting. We don't know what's happening yet. GD, GE. GE looks bearish. So GE for puts, Coco for calls, STLD for calls, MS for calls, EW I think was a spread. And yeah, I hope that helps. Happy trading, guys.